All right, we are live. It is February 1st, 2023, and we will wait for a few minutes while we get connected, and then we'll get started with our Daily Rates Live show. Welcome, everyone. We'll get started in a minute. It is February 1st. We are now live on a few platforms. We'll wait for all the platforms to go live and everybody get connected, and then we'll get started in a second. All right, let's get started. Welcome, everyone. My name is Nick Hiersche. I'm the president and founder of the Mortgage Calculator. We are a lender that specializes in alternative financing programs, as well as conventional FHA, VA, USDA, and all of these standard mortgage programs. So I'd like to thank everybody for joining us today. Today is February 1st, 2023. Today we'll go through the live rates as it is now 11 a.m. and we have live rates on all our standard programs. And I'm joined here today with our sales manager, Jose Gonzalez, with over 27 years of experience, and our COO, Kyle Hiersche, who will explain a little bit more about how to connect with our team and get a quote like you're about to see. So today we will have a deep dive into a topic, as we do every day, on a special program. So today's topic will be a deep dive into financing multifamily properties. And for us, that really is multifamily with 8+ units. There are some different programs that we've had on another version of the show about a week ago for our 5 to 8, which is kind of a small commercial multifamily. That can now qualify for more of a standard program. Once we step above 8 units, it's typically a whole nother ballgame, a true commercial program, which Jose has a great example. We'll go over here in a minute on our live show. So we'll be talking about that here in a couple minutes. For now, let me go ahead and get started with the daily live rates on the standard programs. So let me switch screens really quickly and pull up our live rate tool. So this is a tool that we've built for our team, our licensed mortgage professionals. So this is only for professional loan officers. So please, what you're about to see is just our pricing indications. If you want a full quote, please get with our team. We have over 350 loan officers in 17 states to do primary, secondary homes. And we can do our business purpose, DSCR, multifamily type commercial stuff in most states in the US. So please get with our team. They can get you a full breakdown. But today, we just want to check out in general what the markets are doing and what our rates are looking like today. So we'll pull up a standard scenario like we do every morning. We're going to do an 80% loan. That means 20% down payment purchase. We're going to look for a price of 99. What that means is one discount point in cost. Typically, our customers are wanting to buy down the rate a little bit, especially since rates are a little higher than they have been recently. So people usually want to buy it down, whether that's a temporary buy down, a permanent buy down. We're typically getting requests to buy it down and often be financed with a seller concession of some kind. First, we're going to go through our conventional conforming options. Then we'll go to our FHA, which is usually the next option. VA and USDA are obviously for specialty scenarios. So if a veteran qualifies for VA loan, we'd appreciate that. We'll be glad to quote that in a few minutes, but not everybody does. So we appreciate your service. Get with us. We'll quote it up. And if you're shopping in a USDA area, this only works for rural properties. So if your home that you're looking for is in a rural area, please get with us. We can quote the USDA and you can compare it. But for today's show, we'll stick with the top 3 options. Usually once we go From FHA, we'll go into our non-QM or expanded guideline options. That's really where we specialize as the mortgage calculator. We have thousands of loan programs beyond just conforming conventional and FHA. So we'll start today with the conventional options for a purchase, 30-year fixed, primary home, single family, 1 unit, and Florida, Miami-Dade as our location. That's where our office is based. And for our scenarios, we'll use a 760 FICO score and an estimated 40 DTI for all of our scenarios today. Just a basic setup so we can see what the markets and the rates are looking like this morning. So let's see what we have here. And as we do every morning, we're going to pull up some of the specialty programs. These home ready, home possible programs are for borrowers often that have an under area median income. So since not everybody can get those, let's scroll down to the first standard program that we will see. And looks like the first standard conforming 30-year fixed with no fine print here is at a 6% rate, 4.75 in discount points. So that seems to be the best combo that the computer put out there, which is a great option. Slightly cheaper than it was yesterday on the show. So that's, again, why we love doing the show every day, just to compare the slight variations in the markets every morning. And you can actually see a perfect example of how that affects a scenario if you're in an example scenario similar to what we're doing right now. Now, let's go and pull up our next scenario. We'll go back to our tool. We will pull up an ADLTV, and if a customer does not qualify for a conventional loan, maybe needs a little more DTI or some other reason to use FHA, typically FHA is the next option, a little more lenient on the guidelines. So we'll check out FHA, ADLTV, everything else will stay the same exact scenario. And let's check out our FHA rates this morning. So here at the top, FHA 30-year fixed, 5.25 rate, 1 discount point in cost. Looks like there's actually another program here with 5.25 rate with a little less cost. So obviously we would choose this one as the best option. Just keep in mind that FHA does have the monthly mortgage insurance and upfront. So there is an additional hit to the APR. So you can compare apples to apples, always compare your APR. That allows you to compare across different programs for the true cost of the loan. But these are great options for our borrowers who may not qualify for conventional. But now, what happens when a borrower may not qualify for conventional or FHA? That's where we come in. So we have the expanded guideline non-QM programs, which some other lenders or banks don't have. So when they're out of reach from the FHA or conventional programs, there's often nowhere else to go. But that's thankfully where our team can step up to the plate and provide thousands of options for the same exact scenario under our non-QM programs. So we'll click that option, expanded guidelines. Everything else will stay the same. But you see over here, income verification is a new option that we have under non-QM. So we can obviously go full doc, which is what FHA and conventional use, or we have all these other options. 1-year alt doc, 2-year alt doc, asset related. We do that on a couple shows. Business bank statement 12 and 24, very popular. For non-owner occupied, investor DSCR, investor no ratio are awesome programs. We'll talk about that in a second. And our most popular programs here under the non-QM are our personal bank statements 12 months, personal bank statements 24 months. So that's typically the option we go with. That's our #1 requested product when someone may not qualify for a standard program. They're usually going to be self-employed. Typically on their tax returns, they don't always look as strong as they may look using their bank statements. So we're able to use their actual bank statements with their actual cash flow to determine, using 12 bank statements, their estimated DTI. Using these alternative calculations will then allow those borrowers to qualify where they may not otherwise qualify. So these are great options for our realtor partners and other things like that who are self-employed. So let's check out the options we have today. So here at the top, we have our alt doc agency options, basically a bunch of different names for bank statements, a bunch of different programs. So hundreds of programs we have. The lowest option is 7.375 for just under 1 discount point, and it varies here. So when you have these non-QM expanded guideline options, there are various tricks we can do and various ins and outs of these programs. So different ones of these programs allow us to do different things, such as do loans still for people that maybe have recent credit events, maybe bankruptcies, short sales foreclosures, things like that. So you see these prices vary all the way up into the 9s and even higher in some cases. for all the different variations of these bank statement programs. So we love to navigate these programs. Please get with our team. We'll see which one of these fits you the best. But there are options as low as 7.375, and you see everything else in the range there. So we love to offer these alternative programs. Obviously, the rates are a little bit higher, but they allow people to reach the home of their dreams where they may not otherwise qualify. And for our last couple examples here, we always want to pull up a couple investment properties. So we love to work with investors, whether they're a first-time investor buying their first rental property or someone with 100 properties, work with a ton of heavy investors across multiple states. So let's pull up a standard investment property purchase scenario for 80 LTV, 20% down. We can compare our conforming conventional rates to our non-QM options. So first we'll check out the conforming purchase, 30-year fixed. Everything else will stay the same. It'll just be for an investment property. And we'll check out what our conventional programs offer. So we'll see that they have an additional cost here. So conventional programs have added an additional loan level price adjustment to investment properties, basically a penalty, which is why you see here a large amount of discount points. Even though the rate is very decent, there are a lot of discount points. So a lot of times our investors are looking for options with less discount points and more flexible options. So these are great for our investors that qualify full doc and would like this lower rate for the higher cost. But we'll pull back over here. And if we compare that to our non-QM options under expanded guidelines, we'll see some lower discount point options because the rate will be a little bit higher, which our investors don't always mind. So we'll do 80 LTV again, 30-year fixed purchase, but we'll use alternative income. And in this case, our most popular program for an investment property is our DSCR. That is because it does not require any income or employment or any income verification of any kind. It uses the property appraisal rent value in order to determine if that can cover the PITIA of the loan. So no personal income, no personal employment needed for this type of loan. Allows our investors to quickly qualify for multiple loans, which they love to do. Under our non-QM, non-owner occupied, we're always going to typically have a prepayment penalty. So our standard is going to be 3 years. If you would like to have no prepayment, we can have a 0 option, obviously costs more. You can also have a 5-year option that will cost a little bit less, more savings. But for all our standard scenarios, we're going to do a 3-year prepayment on our DSCR quotes. So let's check out our standard DSCR option to compare to the conforming. The rates are obviously going to be a little bit higher, but you see some great discount points. So this is an 8.25 rate, but very low amount of discount points. So our investors that are buying more properties can save 2 to 3% that you saw compared there to conventional, and their property still cash flow often at a little bit higher rate. So our investors love these programs. And as you can see, there are dozens of them with different options. Again, get with our team. They can navigate the best DSCR options for you and find the right program that fits your scenario. We can also do short-term rental income and some other tips and tricks there, which would obviously usually be a little bit more higher on the rate. But for example, some of these may allow short-term rental income for a little bit higher rate and cost. So great options we have here. Please get with our team members and they would be happy to quote this. Let me go ahead and get into our deep dive today. So let me move my screen off. And let me introduce Jose Gonzalez, our sales manager and founder of our team here that has been in the industry for over 27 years. He's going to do a deep dive into a multi-family purchase option, which is just amazing, but it's a very complicated, right? So these are some of the advanced things that our investors love to do. And Jose is always up for the challenge and up for teaching our team how to meet these challenges as well. So Jose, go ahead and explain this quote, and I'll go ahead and pull you up when you're ready.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Jose Gonzalez here, sales manager for the Mortgage Calculator, licensed since September of 1995, helping out teammates ever since then. So what we have here is a really exciting type of product because as you're going to see, the rate that is going to be offered on this is extremely competitive. Now, this is a 37-unit multifamily full doc purchase. And the very interesting twist to this transaction is that this property is actually converted to an 82-unit student housing facility. As you all know, those of you that may have experienced student housing, you all know how competitive that is. Myself, having had my two daughters in the university and putting them in outside of the campus student housing, very popular, always in demand. So, in this scenario, the a commercial conduit that we are submitting this loan through is a true Fannie Mae type organization. So they are offering the best deals, which is why it is full doc. But again, full doc here is full doc for the property more than anything else. They're going to review the cash flow. This is a non recourse loan, which is what every investor loves to have, which is, you are not personally on the hook for this loan. This is a loan to the entity, right? Which is why they're looking at the income of the property only here in this case. So it is a 30-year amortization in this deal too. So that definitely adds to the cash flow. The main point to consider here, besides the fact that it's full doc, is that due to the specialized nature of the property being student housing, they are requesting prior student housing ownership slash management experience from the borrower. That's to be expected because of the amazing rate that they are offering here. So uh, this is actually an actual quote that we have for a deal that we're trying to get into process. So this is real life scenario that I'm sharing here with you. And this is, the actual quote that, we were able to obtain after scouring all the options and coming up with the best one. And you can see why it's so good, because here we're looking at 5.25% interest rate for this property. And mind you, this is also three buildings that comprise this. It's like a three property portfolio, let's say. So it's a 2.25 discount points on this rate. And it is $4,387,500 loan, $5,850,000 purchase. So this is 75% loan to value. So, and that is a lender paid rate and cost. So this includes all of the origination fees payable and everything. So again, you see how this deal, you're getting a lower rate than you would on pretty much any other product type out there that we would kick out that would be investment. So this is very good. The other point to consider is that this being a true commercial loan, this does have a 10-year term. And, it's very common for commercial loans to have either a 5-year term or a 10-year term, and obviously the 5-year may be a little bit lower rate than the 10-year, but the amortization is 30 years. And that's really going to be the important factor to consider, because the 5.25% rate combined with that 30-year amortization is going to yield amazing cash flow for this property. I mean, this is, I guess, what would they call those? A cash cow. This thing is just going to be making money for you left and right, especially how they have it broken up as an 82 unit student housing option there. So, very good option. Again, full doc, but don't be discouraged by the full doc part of it, because the full doc part of it is really just all of the typical property disclosure items that you would want: rent roll, leases, tenant estoppel letters, so forth and so on. Those different types of items that they'll use to vet the property and qualify the deal. So again, at the mortgage calculator, we not only do your inside the box investor deals, because even our deals, our DSCR are not inside the box. But when you're comparing it to this kind of deal, this is really out there, and this is really the kind of value that we bring to the table when we are facilitating the financing for your real estate transaction.
All right. Thank you, sir. ahead and pop that off. And let me bring up Kyle. So why don't you explain how to get with our team where they can get a quote like this amazing one that's even lower than primary home rates, right? It's pretty crazy for a multifamily purchase. So why don't you go ahead and explain how to get with our team?
Yeah, absolutely. So that was a real quote, like Jose was saying. So definitely amazing. That was a real quote that one of our loan officers sent to an actual client, right? So absolutely amazing rates, amazing program. So we do everything under the sun from conventional FHA, VA, USDA, all the way to things like this, commercial, fix and flip, multifamily, DSCR, of course, bank statement, asset utilization. So we really have everything under the sun. We have 350 loan officers all across the country. We're licensed in 17 states, and deals like that are business purpose loans we're going to be able to do those in most states. So if you have a loan officer that maybe shared this with you, or you're already working with one of our loan officers, get with them to quote whatever scenario that you're looking for. They can typically quote those scenarios within minutes. And if you're not working with one of our loan officers already, you can visit our website, themortgagecalculator.com. You can actually apply online, and we'll connect you with one of our loan officers. Now, our loan officers are not only trained to do those conventional loans, but they are loan consultants that can walk you through the different steps of these processes and find the best program that works for you out of this plethora of products that we offer. So reach out to us. You can also email us info@themortgagecalculator.com if you would like us to pair you with one of our loan officers, loan consultants, as you should really call them. So we do this show every morning, 11 a.m. Eastern. We go through the different rates for that day, and then we do a deep dive into one topic, which today was the 8+ unit multifamily. So we will see you tomorrow, 11 a.m. Eastern time. Thank you for tuning in. Everybody have a great day.
Thank you, everybody.